So, first of all, I want to say that my heart goes out to all those that have been affected by the horrific events going on in Ukraine right now, to the hundreds of lives of soldiers and civilians that have died so far as a direct result of this conflict. Also, I totally think that money should be a second thought in times like this. But I do understand that in the midst of all the chaos, we need to think about how these events are going to affect our future and those of our families. Even more if you have money in investment vehicles that might be directly or indirectly affected by the war conflict. I was thinking about this the other day, and I came across a quote on the internet that actually got me thinking whether events like this, geopolitical conflicts like this, might actually represent a good investment opportunity. This is the quote: "Buy on the sound of cannons and sell on the sound of trumpets." This is a great quote, and it's attributed to the financier Nathan Rothschild, and now it's burned into my mind, and I bet into the mind of thousands, if not millions, of investors across the world. This quote basically suggests that the best time to invest in the stock market is when war is breaking out, because that's when there's more fear and uncertainty in the market. While the best time to sell is when the end of the conflict has already been reached, because that's when markets have already priced in all the good news on the way towards peace. But is that really so? So today, we're going to put this quote to the test, and we're going to go back in history, and we're going to focus on war conflicts from about a century ago and how investors reacted throughout history to this event. Now, just to be clear, this time frame is completely arbitrary because actually I couldn't find enough reliable references from before that time. So if that sounds interesting to you, please stick around to the end, because at the end of the video, I'm going to share with you some lessons and conclusions about how to act in moments of geopolitical conflicts like we're going through right now. Hi there, my name is Hector. If you're new to my channel, here I talk about everything related to personal finance, from stock market, real estate, cryptocurrencies, NFTs, and even boring history classes like today's video. Anything that could affect your finances, we'll talk about. So if you're into that kind of stuff, would you consider subscribing and also hitting that bell notification so you get notified every time I post new videos? So without further ado, let's dive in. We start our journey throughout history in 1914, when the Dow Jones Industrial Average Index already existed, and it was an increasingly popular index. During the summer of 1914, the assassination of the Archduke Franz Ferdinand of Austria caused an outbreak of tension that would end up at the end of July with the start of the war. That event led to the closure of the New York Stock Exchange for 4 months because they thought that if the markets remained open during the war, a great financial crisis would occur. The Dow later plummeted to lows that had never been seen since its conception. It recovered almost a year later, and then it remained for a few years with continuous ups and downs. It did have a strong rally after the peace agreement was signed. However, it was not until the beginning of the 20s when it really started to fly. We now move forward in time to 1940, during the run-up to the Second World War. Hitler unleashed panic in the markets. The invasion of Netherlands caused one of the greatest episodes of hysteria in the market. The Dow Jones lost 23% in 2 weeks due to fear of the Nazis taking over England. But the worst was yet to come the following year, when Japanese troops bombed the US military base at Pearl Harbor. The US responded by engaging in the Second World War that would later be won, defeating Hitler's Nazi regime. By the way, investors also participated in this war by buying patriotic bonds that were issued during the time. These bonds were issued to finance the expenses of the conflict, with spectacular propaganda that is reflected in the poster of the time. The market downturn continued until April of 1942, when it bottomed out and it began to recover. By the end of 1945, 4 months after Hiroshima and Nagasaki, the Dow Jones had already doubled in value. Alright, so now let's fast forward to 1950, when on June 25th, North Korea invaded South Korea and started the Korean War. Again, the indices suffered in the short term, with a 12% drop in 3 weeks. But then the quick reaction of Western countries in support of South Korea generated a new state of optimism. helping the markets to quickly recover and even taking the Dow Jones to new all-time highs. That started a fabulous period of time without new conflicts that led to the well-remembered Nifty 50s. However, we can't forget that the mid-50s also marked the beginning of the war in Vietnam. And although optimism returned to the indices in 1958, there was a slight slowdown in the markets due to the missile crisis. Then fear arose once again with a new global confrontation between the US and the Soviet Union. The Dow Jones once again lost 24% from that year's all-time high. That nightmare ended when Nikita Khrushchev agreed to withdraw their missiles, and then the euphoria skyrocketed. Just a year later, the American stock market had risen almost 40% to new all-time highs. In 1972, the Dow Jones exceeded for the first time the 1,000 points, but shortly after, a major bear market began in which it lost 40% in just 2 years. It coincided with the energy crisis of the 1970s and the Egyptian and Syrian attacks on Israel in the Yom Kippur War. Alright, so now let's move on our timeline to the invasion of Kuwait by Iraq during the summer of 1990, which once again generated another peak of nervousness in the market. This conflict with Saddam Hussein caused a drop of over 20% in the Dow Jones. But by the beginning of 1991, given already the favorable prospect for the Allies' victory, the market shot up again. Not even the Balkan Wars could alter the optimism that ended up in irrational exuberance in prices by the end of the century. Alright, so once in the new millennium, despite the multiple conflicts, we all remember one that was truly dramatic. The one that began with the Al-Qaeda attack on the Twin Towers on September 11 of 2001. An event that marked the Great Western Offensive on Afghanistan in search of bin Laden. That event punished the markets that had already been badly hit by the bursting of the dot-com bubble. As in 1914, the New York Stock Exchange also had to close its doors, although this time was not for 4 months, but only for 4 days. The stock market continued to fall until 2003, when that spectacular rebound began, and lasted until the housing markets in 2008 before the fall of Lehman Brothers and the beginning of the new financial era during the crisis. Since then, the war in Syria, the tension generated by the Arab Spring, and the eternal conflict in Afghanistan have been leading the headlines, the war headlines, but without a very evident impact on the markets. Nor was the geopolitical stress caused by the Russian invasion of Crimea back in 2014, or the start of the Donbas War, which is now back in the news. Well, to finish, what can we learn about all of these conflicts? Well, if history is of any indication, we learned that first, when the conflict is global, it usually generates a strong initial fall in the markets. Therefore, if you're looking to buy at a deep discount, this in fact might be a good time, just as Mr. Rothschild suggests. Second, when the conflict ends, it might indeed be a good time to sell because investors actually buy as things improved, and indices have normally already reached new all-time highs by the end of the conflict. And third, and be aware of this, because it might not always be the best idea to sell everything at the end of the conflict. Many times, the period of peace that follows after the conflict finishes gives rise to speculative behavior in the markets in the following years, in which case you could miss by selling everything with the sound of the trumpets. Well, that's a little piece of history for you to think about. That's it for today. Short and sweet, right? If you enjoyed this video, would you do me a big favor and hit that like button for the YouTube algorithm? It helps a lot the channel and helps me grow and get to my coveted 1 million subscriber count goal, okay? Also, subscribe to the channel and hit that bell notification so you get notified every time I post new videos. All right, this is it for today. Bye.